Wish has been one of the top trending stocks on Reddit and Twitter, or FinTwit lately, and it's an interesting one because I wouldn't exactly call it a meme stock. It's a little deeper than that. But with its recent decline and its potential upside, is it a buy? Let's answer that for you today. If you're new to this channel, and chances are you probably are because I'm also new to this channel, what I do on here is just give my thoughts, analysis, and rants. I haven't really ranted on here as an entrepreneur and full-time investor. So if you find any of this helpful, I'd really appreciate it if you hit the like button, subscribe, and you can also subscribe to my email newsletter. The link is in the description to get more access to me. So without further ado, let's talk about Wish. It IPO'd last December in 2020, where it began trading at $24 a share. And since then, it took a 50% nosedive to where it is today, trading below $12 a share. So of course, we need to understand why. But first, just for shits and giggles, I want to check the stock's meme potential. And what I mean by that is really just its short interest, because that seems to be the flavor of the month or quarter for Wall Street Bet's targets. So as I can see here, Wish has a short interest of less than 5.4%, which isn't that high. So this tells me that short sellers aren't exactly interested in betting against the stock, which is typically a good thing. But it also tells me that there probably isn't going to be a miraculous short squeeze that Wall Street Bets typically hopes for. So why has Wish dropped 50% in the same period where its competitors like Amazon and eBay have jumped 15% and 30% in the same period? Well, to me, the answer is pretty clear. Wish is not an Amazon or eBay, not even close. And there's really two fundamental reasons for its recent decline. Number one is a class action lawsuit brought forward by a law firm named Higgins Berman for investors who bought at or near IPO and suffered losses because of a potential miscommunication or withholding of information by Wish management. The claim is that Wish, or its parent company Context Logic, in its IPO documents reported 108 monthly active users, whereas by the time of its IPO in December 2020, their monthly active users had quote unquote declined 10% year over year during Q4 to 104 million. If this was known during the IPO, it would have been their fiduciary duty to disclose it. Number two is actually more concerning to me, and that's an unclear path to profitability, which I'll get to more, but first I wanted to understand what exactly is Wish. According to Wish, its mission is to bring an affordable and entertaining mobile shopping experience to billions of consumers around the world. What I take from this and sifting through their S1 filing and just my understanding of the app through interfacing with it is that they are price-centric first and experience-centric second. While I agree with the price-centric part of it, I don't necessarily buy into the experience part of it, just because I think most of the people are just going on there to bargain hunt. And sure, you can find some cool gadgets for cheap, but it's really, you're just trying to buy something to see what you get. And aside from the Chinese counterfeit issues, which I won't get into in this video, what you get from Wish isn't always exactly what you order, and I'll let the memes speak for themselves on this one. Oh man. And some of these just really kill me. The path to profitability. This is my main concern with Wish stock. And that's not to say that this isn't already priced in to reflect that. But let's have a look. In terms of financial health, I know that most people are looking at their balance sheet and their 1.6 billion in cash, but most of this comes from their recent IPO, and sure, they won't need additional debt for a while, but at the rate they're spending, they'll eventually need something. The issue is their sales and marketing. So when it's all coupled under SG&A line item, this is anywhere from 80 to 100% of revenues, which is just ridiculous. Wish aims to reduce sales and marketing to 40 to 45% of revenue, but how and when? I normally don't have a problem with high marketing spend, but when you couple that with a declining monthly active user, then I have a reason to be concerned, because as funny as the memes are, they seem to be true because people are not sticky to the platform. From this graph here, which shows the core marketplace revenue of Wish by geography, you can see that South America declined 22% year over year from a pullback in marketing spend. So my concern here is, of course, 22% is a really big number, but what happens to North America? What happens to Europe when we have to pull back the marketing spend there? Which we are saying we have to do in order to get on the path to profitability. And this concerns me because it shows me that most of the customers or users on there are coming on as a response to direct response advertising, and there's very little branding or loyalty taking place. The first quarter of 2021, they actually were able to reduce their SG&A expenses and still maintain revenue growth. But as much as this is good information, I just want to point out that we're riding off of the COVID-19 growth, and this isn't something that can last forever. Besides all this, I just don't get a confident vibe from their CEO, Peter Selesky or whatever his name is when answering the question of how and when they're going to be profitable.
When do you see Wish becoming a truly profitable enterprise?
Yeah, first of all, thanks for having me. Look, I think as long as we focus on our core value proposition, delivering value for our customers, creating a fun shopping experience on mobile, focused on value, the most bang for the buck. Think, TikTok for shopping, and an easy way for manufacturers, digital vendors, brands to reach a global consumer base. We will have opportunities to become profitable in the future. But in the long run, I think the key is to continue driving as much value as possible for both of these participants, despite sort of a very unpredictable year, not just for us and other e-commerce players with.
So that's my main concern, but is it priced right? Is Wish stock still a buy? Valuing Wish is a very challenging, if not impossible task. And I've seen bloggers and YouTubers attempt this, which I have nothing against, but for me, I just don't feel comfortable with taking such big assumptions to Wish's path to profitability and positive cash flow. The most fundamental metric to a DCF analysis is free cash flow. And given the company's history, it's near impossible to forecast what this is going to be going forward, let alone when it's going to be positive. Based on an assumed 10% revenue growth year over year, which is what I feel comfortable with given that's what they were before COVID, I definitely think it's going to be much harder post-COVID, especially with declining monthly active users. I find that there is potential to be profitable in 2025, but the margins are so compressed and so slim, and Wish is going to have to figure this out. I'm not saying it's not possible. It's definitely possible, but you're going to have a real thought leader coming in. Well, I'm not saying it's not Peter. Obviously, that judgment just came out, but it's going to take a lot of turnaround to make this a profitable company outside of the model where it is today. So there's just a fundamental issue, in my opinion, with the current model of Wish, because it's proven with the stickiness or unstickiness rather of the monthly active users. They are not coming on there to be loyal to Wish or the app. They're just coming on there to play games and have fun, but this isn't going to be enough for Wish to get to profitability, and that's just my opinion. And can it be done? Absolutely, it can be done. Do they have a lot of branding and equity value or obviously customer database and data to take this to that next level? I do think so, but it is going to require some innovation outside of the current model. I think this is definitely possible, and I think it's priced right if they can do this, right? If you can buy in at the current price today, and let's say they can do this, of course, this is going to be a stock that can have a huge upside potential. But it's just a matter of how comfortable you feel with that and what are the alternatives. For me, it's always about risk reward. I explained the risk and the potential reward, and it's just a matter of putting them together now and determining whether this is worth buying or not buying. I can definitely make the case for going for it, but at the same time, we have to look at what are the alternatives. The alternative, for example, is what if we were just to take our money and put it into Amazon stock? Would that be better? And that's the question I'm going to answer next time on the next video. So I really hope this video helped you at least put some thought into the stock and analysis and take a deeper look at it before you buy. That's my objective here. I hope you enjoyed it. If you did, again, I really appreciate it if you hit the like button, hit subscribe, and sign up to my newsletter. The link is in the description, and I'll see you on the next one. Hopefully you still stick around.